correct trade procedure for the bounce model. Now, as you can remember, we spoke about it already, but in this lesson we'll talk about the technical details of how to enter into a trade using the bounce model. Now, remember that this is possible only with a strong limit player, and I do recommend using only a strong daily level for this type of entry. Now, you can see this kind of a trade procedure you'll be able to do in a 5-minute chart, but I still recommend trading a daily key level from the daily chart. You can still use the 5-minute chart for your entry and see this kind of a structure that I'll show you in this lesson, but the level itself should be coming from the daily chart. But that's my recommendation. The hourly chart still, hourly key level still might be okay, and the 4-hour key level still might be okay as well. So let's move to the trading screen and I'll show you an example. So here we can see a really nice limit player formation, and let's just mark the level, and you can see that there are quite a few hits into this level right on the spot. And as you can see, we have 1, 2, 3, and 4. Now, and this is something that we should be looking for in a 5-minute time frame or the time frame that you're using for your actual trading. And once again, if this level is the same as the level in the daily chart, that would be fantastic, or any other stronger time frame key level. So the entry itself, for the entry itself, there are quite a few rules that you must follow, so make sure you pay attention and take proper detailed notes. So the procedure is as follows. Number 1, we need a level which will be created by, as you already know, the CCL, the candle that creates the level, then CSL1, the candle that supports and confirms the level, and the CSL2, which is also the candle that supports and confirms the level, number 2. And for that, you can see here we have our CCL, the candle that creates the level. Right here, this is the candle that has created the level. This is the first candle that has created the level. Now, this small candle right here, it's not ideal, but it is okay. It's a small false break, but if you are trading, for example, Forex, then these kinds of candles might happen after the CL, after the candle that created a level, and that is okay. Now, what interests us for the bounce model is what happens next. And the next, we need to have 2 CSLs simultaneously. So this is our first CSL, this one right here. Then the second CSL is this one right here. And it is extremely important that these candles hit the level right on the spot. In this way, confirming that there is a super strong limit player at this precise level of the price. And once we have our CCL, CSL1 and CSL2 with no interruptions between CSL1 and CSL2, and this is extremely important, write this down word for word, for the bounce model to be true and to be working and not to be broken, there must be no interruption in between the CSL1 and the CSL2. So we must not have any false break or piercing of the level around the area of in between the CSL1 and CSL2. So as we have it in this example right here, the area is clear and there are no interruptions and no false breaks in the middle. Like this one here, this is a small false break of the level, but it's in between the CCL and the CSL1, and that is acceptable. But the most important rule is the CSL1 and CSL2. They must be hitting the level right on the spot, right point to point, and they must not have any interruptions in the middle of them. If there would be an interruption in the middle here somewhere, then the model is broken, and we would have to see this as follows. This would become a CSL1. So instead of this being a CSL1, this would be CSL1, and this would be CSL2, and then the next part of the trading procedure of the bounce model would engage. Now, so here we have CSL1, CSL2, and once again, if there would be an interruption in the shape of a false break like this, like we have here, even the smallest one, then the model would be broken, and we would need to see once again the new CSL1, and then with no interruption as CSL2. But as we have no interruption here, this model is working very nicely, and we can move on to the next aspect of this trading procedure of the bounce model. So the next aspect of trading the bounce model is seeing that the CSL2 has happened, and it has hit the level precisely point on point, and it is moving away, as you can see right here. Now, the next aspect is as this candle finishes the CSL2, as the CSL2 closes and finishes, we set out our limit order a few points above the level. So this is quite important, because this is the only time you will be using a limit order for your entry. Remember that for the true break or the false break, we only used the stop orders. And for the indicator trading, we used market orders. But for the bounce model, we will use a limit order simply for the reason that we are not waiting for the price to break the level and then set out the order. We are setting it out so that if it comes to the level once again and perhaps repeat the same structure, hitting the level in the same spot and then moving away, we will use a limit order for that. So let's mark it in green color, our limit order, just a point, a snitch over the level here. But I'm saying a few points or a point. There is an actual calculation of the PTE. This will be your point of entry, and there is a very specific calculation, and it's not right on the level, because if you think logically, then maybe it's logical to have your limit order right at the level. However, there are quite a few situations where the price might not come to the level precisely. It might be a few points off, maybe 1 point off or 2 points off, and that's why there is a thing that is called a backlash. And the backlash is calculated in a very simple way, but that I will show you in the next lesson. For now, all you need to know is that you set your limit order for in this case, buy limit order, so that if the price comes down, as this candle here opens, if it comes down and touches your limit order, automatically a long position will be open. So it's a limit order for buying, a buy limit order. And this is pretty much how it works. So once again, as this candle gives us a CSL2, it moves away and finishes, we set out our limit order, this green line right here, a few points above the level for opening a climbing position, the long position. And as the price moves down here, and actually it does touch the level, but it's okay, it's normal. So with the backlash is just in case it does not come to the level and does not get to the level by just a few points. And to make sure that we get the trade, we do use the backlash, and we calculate how many points above the level we can allow ourselves to open the trade before the level itself. But that we'll talk about in the next lesson. I'll show you how to calculate it. Right, and the next step for the trade procedure for the bounce model, as this candle which opened here and we set out our limit order for buying, moves down and completes our order, executes our order, we enter into climbing prices. And as you can see here, this would be quite a very, very nice entry into climbing from the lowest possible position. And with no break whatsoever, we would be flying into our take profit. And remember that only with bounce models, you will be able to have the smallest stop possible. So your stop, and let me show you how the stop would look like. In this case, the stop should be, it will be, of course it's technical, but it's not attached to anything. It's basically is 1 or 2 or 3 points behind the level every time you're trading the bounce model, because the idea of the bounce model is having a very strong limit player. Therefore, you'll have a very powerful level that will be keeping the price from moving below or above that level. Therefore, the stop must be extremely short, because if the price does break it and move beyond the level, any kind of stop, any size will be pulled. 20 points mostly, and 30 points and 50 points will be taken. So the bounce model is super cool for trading with minimum risk and maximum potential reward in terms of the ratio. And in this case, as you can see, this is exactly where the red line is, and this is where my stop would have been, and it's actually around 2 points. And I love this kind of trading. These bounce models, they don't really happen that very often, but when they do, I always trade them, I always keep them in mind, because I'm risking basically 2-3 points, and I would have a take profit here of at least 1 to 10, 1 to 20. It depends on the range. Of course, where is our next level, key level, and the ATR, and a few other things that you are already aware of. But the ratio of take profit here with the bounce model makes no sense to have it 1-to-3 ratio, because having 2 points of stop, that means that your trade automatically would close around this location with just about 6 points. So that's really not worth the hassle. So you should actually maybe use a take profit of, I don't know, 1 to 10 at least, which would be, of course, still not that big, because your stop is 2 points, and even 1 to 10 ratio, and the take profit would be around 20 points. And as in this exact example, the market moved 140 points up. But of course, you should not be expecting these kinds of moves and expecting to take 1 to 70 ratio. Because 140 points, that's basically having the 2 point stop. That would be a ratio of 1 to 70. And that maybe is a little bit too crazy. So don't expect ever to take these kinds of moves unless it is a super strong level. It is a daily key level, and you see this kind of a limit formation, this bounce model. And then you see that the range is like 300 points and the ATR is at 0. So everything is super fantastic. Then you can actually be a little bit greedy and have a 1 to 100 ratio and just knock yourself out and make a lot of money with absolutely almost zero risk. And this is what the bounce model is for, and this is how to trade it. Right, this lesson is coming to an end. Please don't forget about the test. There will be no homework. There will be a homework on this bounce model in the next lesson when we talk about the backlash and when I'll teach you how to calculate the backlash correctly. All right, see you in the next lesson.